Taylor Swift and Travis Kelce. Thank you for joining.
Thousands are streaming and just as we expected because of the subject at hand. Everyone wants to talk about Bitcoin, so can't wait.
Yeah, I've wanted to do this episode for a while. You know, we talk about a lot of things on the show. We've covered the metaverse. We've covered how to get a job and how to work in Web3. We've covered real world asset tokenization. But the root of it all, and the kind of magnet that essentially drew me in, and I know a lot of people in to the space, is through Bitcoin, and a lot of people get drawn in through Bitcoin and just stay on Bitcoin. They don't need to explore out. We'll talk about that a bit later about Bitcoin maximalism, but I think it starts off with at the top. Bitcoin as a form of money, defining Bitcoin as a store of value, a medium of exchange, a unit of account, and what makes it superior as that. And in order to understand that, we have to first understand what is money and talk about that angle. So we're definitely going to hear that. But first, I want to introduce three legends, entrepreneurs, and more importantly, Bitcoiners. Guy, how are you doing?
Excellent, thank you. So excited to be at episode 7 of GM LinkedIn. Can you believe that, Dave? What started off as an idea that you had a couple of months ago, we're into episode 7. We've had the most incredible speakers. Seems like the momentum is growing every week. This subject is super exciting. I think we spoke about tokenization last week. We spoke about the metaverse. We spoke about working in Web3. But today it's about Bitcoin. For a lot of us, it's why we got into Web3 and crypto, the king. And we've got the most incredible speakers. We've got Alon, Shia, and Jad. David, I know you would like to give a slightly more formal intro to our elaborate speakers, so I'll hand that over to you, sir.
Thank you. And Brian sends his regards. He will not be joining us today, but check him out on next week's episode, Setting Your Token Project Up for Success. We're going the complete 180 to the other side of the world, the token economy, and what it means to set your token project up for success. But today we have the Bitcoiners in the house. We have 3 entrepreneurs, Bitcoiners and legends. Each of them in their own country, in their own domain, but at the end of the day, bringing Bitcoin forward, pushing Satoshi's vision to fruition. Joe, Alon, Jed, thank you for being here. We'll start with Joe, a short introduction. Tell us about yourself, about why Satoshi should deserve the Nobel Peace Prize, and then we'll get to the show.
Yeah, of course. So, hi everyone, I'm Joe. So Joe is more like my screen name. So yeah, I'm the CFO from HAG. So HAG's vision is pretty simple. Is to let more people have the access to the Bitcoin mining in a compliant, sustainable, and transparent way. And I think our vision could totally brings out what Satoshi's visions and entitled to the Bitcoin, because it's about self-sovereignty, and it's about like everyone got an equal chance to own what they want or what they desire. So in this way, HAG grants more people the access to the Bitcoin mining, which might be profitable, but most importantly, Bitcoin miner, we are the infrastructure provider to the Bitcoin network. So in this way, I think what we are doing is pretty make us passionate about the HAG's future could be like, and to fully practice the spirit of Satoshi. Yeah, back to David.
Thank you very much. I don't know if David possibly might have been rugged. For those who are unfamiliar with the term, it means when linked.
Yeah, thanks, Joe. Sorry,
oh, you're back. Okay, you're back.
Yeah,
Awesome.
It's a conspiracy against me by the
slight drug.
Slight drug. But I want to say thanks, Joe. It's a pleasure to have you on. And Joe's been in the Bitcoin OG really from the beginning. So I kind of OGs I respect and value, because for me I see Bitcoin as like some sort of it's a chain. It's a tradition chain, and when I read the OG stories, when I hear that, I came in a little bit later in 2017, so those early days, and I'm talking Satoshi, Hal Finney, and then the second round when the early adopters really started getting in. It's a pleasure to have you on. And then we have Alon, Mark Smith, the man himself. Alon and I met a way back when, and we both went through a similar journey of from Bitcoin to a bit more of the shitcoin Web3 ICO era, and then made our way back to Bitcoin as well. Alon will tell you all about himself and what he's building, and then we'll move on to Jad, who is a legend in his own right.
Yeah, thanks for that introduction. That's exactly right. So I am the co-founder and CEO of NewHedge, which is a data analytics platform for deep analysis of Bitcoin. So you can think of it as kind of Bitcoin's front end to the back end, everything that's happening on chain, network, mining, all those metrics. So what we do is create a Bloomberg terminal-esque experience for people coming into Bitcoin and show different metrics across Bitcoin that you wouldn't be able to see in different crypto analytics platforms, just because it's quite simple, is that crypto is seen as this conglomerate asset class, and there's a lot of low-hanging fruits that are just being thrown around to kind of show vanity metrics. And we focus strictly on Bitcoin, and we end up having unique insights into what's happening on Bitcoin, which is the 600-pound gorilla in this whole space. And
okay, thank you very much, Donald. Dave, are you with us?
I am indeed. But you've got
okay, awesome.
You've got it under control. We're moving to Jad. Thank you, sir.
Yeah, brilliant. Thanks,
okay,
Jad.
Hi everyone. I'm Jad Commerce, the founder and CEO of Millennium Capital. Millennium has issued the first Bitcoin equities ETF in Europe. So we're an asset management company based in Paris, France. I'm a Bitcoiner myself since 2014. I'm French and Lebanese, which gave me a kind of foot between the Western world and the developed world that allowed me to grasp the full potential of Bitcoin quite early when I saw it, and then I went on the quest to Orange Pill everyone, and our aim with our ETF is to is not to compete with Bitcoin, but to give institutional investors mainly who are not yet allowed or don't have the proper regulatory structures to invest directly in Bitcoin, to instead of investing in Bitcoin, investing in Bitcoin equities. So our ETF, basically it's a fund that is listed in Paris, Milan and Amsterdam, and offers exposure to the listed companies in Europe and in the US and Canada, and that are involved in the crypto space with a very high beta to Bitcoin. So we have like the top 30 highest betas companies in our ETF. And our bet is, first of all, to give a wrapper or an investment vehicle to get institutional investors stepping in, because equities is a much easier product to put in institutional investors' portfolios, and at the same time to bring money to the builders of the whole ecosystem, because behind all these private and public companies there are investors that are supporting them, namely the listed miners, the asset managers, the companies that have Bitcoin on their balance sheet. All of these have shareholders, MicroStrategy being one example. And yeah, so the idea is to bring investors the possibility to get exposed to these companies, and at the same time to bring these companies new money and allow them to expand and develop their business, which is based on the Bitcoin network.
I love that institutional grade orange pilling operation. That's what's going on here, and I think ETFs are crucial. As much as I love cold storage, like the super libertarian way. I think, I have, for example, some funds in like saving funds that all Israeli that get, and those would be lovely sitting in some sort of a investment that tracks Bitcoin as a beta. Whether it's MicroStrategy, Riot, mining shares, or Coinbase. There's not that many public companies, unfortunately, in the crypto space yet. I think the next bull market will undoubtedly create more. The question is what will it be. So thank you to Jad for fueling the next bull run, essentially, with your institutional capital. And it's really interesting that you act as I'm sure you have some capital that you deploy of your own, but you're acting as a sort of a platform and a gateway between the institutional investors and the crypto businesses. So thank you for joining us. And without further ado, we'll start our first question. Just kind of getting, we like to take it from the basics here at GM LinkedIn, starting with the definitions and moving on from there. And before I think we can define what is Bitcoin, and someone's answer is inevitably going to include money. So I think when you go back like a little bit about what is money, the history of money, and try and understand from there how Bitcoin emerged as what we call the apex predator of money. So, Alon and we were discussing a little bit before the show happened, and I'd just like to get your view and kick it off from there about, what is money and kind of how we can abstract from that definition to understand that Bitcoin really has very, very strong superior characteristics. If you were trying to engineer money to be in the most evolved form, that's Bitcoin. So without further ado.
Yeah, sure. I can also drop in the chat. I actually wrote an article called "The History of Money" on a site a while back in 2019, because I also had the same question. And we were talking before everyone came about Robert Breedlove, who is kind of a Bitcoin philosopher who has his own show, What is Money? So there's actually a very simple answer, and that simple answer can be opened up into much more complex boxes. But essentially what you're doing is you're putting a value onto something to trade it later. Maybe that's the simplest way of just kind of trading value and allowing barter and trade to occur amongst people. And what's interesting is a lot of people assume that money is kind of just a delusion, is that we kind of just pick something, and if enough people believe it, then that becomes money. So whether that be paper towels or paper clips or, I don't know, a Dyson vacuum cleaner, people just assume, this is a collective delusion. But actually, if you go throughout history, you kind of realize that there's fundamental properties of what makes money good money. And once you kind of realize that, tree leaves and grass clippings can't be money due to these 5 properties, you start realizing that money actually has only been transferred, like what humans value as money, only about 4 or 5 times through history. Before 1971, for about 4 millennia, it was gold. So everything was almost traded and backed in gold until 1971. And since 1971, we've had a new version of money, which is actually backed by credit, which is fiat currency. And once you start realizing the problem that was trying to be solved by cypherpunks in the early 80s, you start realizing what the problems with fiat currency are, and realize that a money like Bitcoin with superior qualities, it actually invented digital scarcity on the internet. You start realizing that money doesn't change hands a lot of times, and this invention is completely groundbreaking in terms of the best money that humans have ever seen.
We'll get into, 1971 a little bit more, because, if any of you haven't seen that website, go to WTF happened in 1971. That's the website that you must go to. It's got all the charts and all the stats and all the metrics you need to understand, how the US debt, like I saw the other day, that US debt is increasing at $275 billion a day, right? It's on track to top 33 trillion. And, we already know from a bit earlier in the year that the US, interest payment on the debt was second, I think, only to military expenditure at the time. So America's debt problem and the world's debt problem is getting bigger than its defense addiction. So there's something to be said about money being untethered from any sort of real world value, any sort of real hard scarcity. Joe, do you have anything to add to the Bitcoin as money, the apex predator kind of the dialogue?
I mean, it's a minor or but like I personally totally agree with Alan. It's like Bitcoin for me is more like the instrument to store the value and also to transfer the value. So anything that could harm the value is the bad way to call the asset. But I think Bitcoin is not the case. And as the Bitcoin miner is that we really appreciate the Bitcoins, and I think more and more miners they join this area, and with some more clear things. And what I'm going to say is that society is a little more clear about what the money is. They will not be fooled by the governments. And I think this doesn't happen when Bitcoin is not arrived. And I think more and more people, because of Bitcoin, they are rethinking what the money means to them and what the good asset should be like. So yeah, there's some add up to what Alan said.
Thank you. Bitcoin definitely the store and transfer the value, and we were saying a little bit before the show how money is supposed to hold its own through time and space. And if you have money, you want to transfer that to your grandkids, or you want to be able to get up and run with it if your country is under attack, or if your interest rates have gone way up and you hit hyperinflation. And when you do, you need something that's portable. So that kind of rules out a lot of gold. You can't really run with gold across continents, and you need something. And when you want to transfer it across time to your grandkids, you can't really do fiat currencies either, because we all know what happens to their purchasing power through inflation. So Bitcoin, I like to think of it as the only form of money that can really hold its own through space and time, and therefore it gives it that kind of long time horizon. That's why we all we're not. Everyone thinks that Bitcoiners or Bitcoin, maybe in the crypto space, some people are very short-term thinking. But Bitcoiners, we take the longest time horizon view on it when it comes to money. So thank you for that. And Jad, is there anything you want to add? And I specifically want to kind of focus in on the sort of the rest of the world, the economies that are kind of shaky. I saw a wonderful moving clip on your LinkedIn about a guy kind of using Bitcoin in Lebanon, and you see that around Turkey, and I've got a lot of Argentinian friends that only use crypto. They're not going to touch the Bitcoin, usually a bit of stable coins, but any country with really hyperinflation, Zimbabwe, you can start to see over there the real need. Bitcoin is not a luxury. So what do you say to that? How do you see, you've been in for almost a decade now, how do you see Bitcoin's adoption around the world, and how do you see it having grown as a form of money?
Actually, it's, is Bitcoin money is a very difficult question to answer, because, I worked 20 years in finance, and before I encountered Bitcoin, I didn't realize that I had no clue what money is. So it was, so most people basically, they run their lives using money, but without knowing what it really is behind it, and how all the mechanisms that are working at the money, the functioning of our monetary systems today are different from what they were 50 years ago, or 100 years ago, or 1,000 years ago, and it takes a very long journey basically to understand it. When I first encountered Bitcoin, it was in 2014, and my main interest was to save on Forex, because I was being Lebanese and living in France. I was going back and forth between Paris and Beirut. So every time I went there, I had to exchange my euros to dollars, and from dollars to the Lebanese lira. And on each exchange, I got wrecked. And every time I was trying to see how I can save money and try to avoid these high exchange rates. Working in finance also, I was going back and forth between Paris and London. When you arrive at the Eurostar in London, you get out and you wanna take the first ATM machine. You get Forex rates between the euro and the pound that are just crazy. And also the Forex market is the most liquid market on earth. It has spreads that are amazingly wide. So there's a kind of oligopoly from the banks and the Forex operators to milk the citizens and the travelers of the world when they change from one country to the other. And that was my first encounter, basically, where I was like, wow, if there could be like one currency that everything is priced in this unique currency, so I don't have any more to change from one to another and worry about which credit card is charging me more when I pay in this currency, where can I get like cheap exchange rates, efficient. The whole Revolut business model actually was built on this inefficiency. And then when Lebanon went bust, basically, and the money collapsed, people that were living there lost not only their Lebanese lira's value that lost like 98%, but also their US dollars that were in the banks. So basically they lost all their money, and at the first weeks and months of the collapse, everybody was rushing to gold and sheeps and luxurious watches. Like the Chanel store was taken by assault because it was like the safest form of money when bank accounts are frozen. So this is where I realized that all the inefficiencies of the monetary system and how Bitcoin can be a currency that is independent of what the governments are doing and how they are managing each one its own money. So you mentioned what the fuck happened in 1971. It's a very slow process, so people don't realize it. But when it's quick, like it is in Lebanon, they have to realize it overnight. And this is where I think more and more Bitcoiners will emerge from collapsing economies and collapsing countries where the money fails.
I'm clapping because, for the last part about more and more, for the fact that we have Bitcoin, not obviously for people in hyperinflation economies, because I know the pain of that. I was brought up in South Africa, and we had a bunch of xenophobia around there because there was a lot of Zimbabweans come looking for work, in Johannesburg, in that environment, and they'd be willing to work for a lot cheaper, because for them to send rands over to Zimbabwe is priceless, because their Zim dollar they would add a zero to the banknote every hour, and you see the pain of collapsed economies, and the Zims are incredibly intelligent, polite, like friendly people, and they're just they just completely underpriced, and we see that anywhere where there's monetary instability. So as I say to all my friends, in South Africa over there right now, South Africa's kind of shaky as well, and that sort of risk and concern that it's the next Zimbabwe. And I say to them, like, with the rand, I call it the ultimate shitcoin. The rand may or may not collapse to the Zim dollar level, but it's definitely not going to hold its value. So, if you're in those kind of environments, you should be getting, as hard as you can into hard money, or as you've said, like people going around with hardware wallets and ledger hardware wallets and Chanel watches in the streets. But that's what you got to do. So it's kind of it's inspiring to know that at least now they have Bitcoin, and those of us lucky enough to live in a developed world where banks seem to be working okay. That's only because we're closer to the center of the ripple effects from the Federal Reserve's policies. Like at the end of the day, I think all this hyperinflation around the world, Lebanon, Zimbabwe, Argentina, because these guys, they can't print money if their currency gets into a bit of trouble, if the economy is slow. They can't just write stimmy checks because there's no demand on a global market for their own currency like there is for US dollars. So the US prints dollars and gets a lot of debt, and it's the developing countries that have to suffer the knock-on inflation effect of inflation.
David, is it okay if I also jump on, because I think Jad hit an amazing point right at the end, like a true Bitcoiner, and to say that this was happening because of the government's action and their control of the money. And then when we're talking about the rand being a shitcoin, the Lebanese lira being a shitcoin, I think we kind of understand that fiat currencies are copy paste across all countries. They all have the same fundamental central planning and central control over their supply. So whether it's the lira one day or the rand the next day, all are subject to the same inevitable fate. And I think that coming around, that's why Bitcoin is so important and different amongst all the other projects happening in Web3 and crypto, is because it came out of the necessity of needing something to be separated fully from the state. So once you have money that's completely separate from any kind of central control, there's immense value in that, whether you're doing foreign transactions like Jad was speaking about, whether you're doing cross-border payments, or whether you're trying to save your money from the actions or inactions of your government, which I think kind of like rounds out the point of why Bitcoin is so important.
Definitely, and that's another reminder to check out what WTF happened in 1971. So let's move from the kind of the need for Bitcoin. I want to talk a little bit more about the Bitcoin industry, where we're at compared to. I mean, we all got it in different times, and wherever even for me 6 years ago, like the Lightning Network wasn't around. We didn't have a lot of the institutional. We didn't have Michael Saylor. Let's put it that way. 6 years ago. So we've definitely come a long way, and I'd like to see how kind of you guys see it from a point of view of what components in the ecosystem have we done well to kind of build, which is maybe we have like wallets, or we have we have it on balance sheets and corporate companies, and then what do you think we can do to improve in terms of to get Bitcoin to the next billion people? Like for example, an ETF, or some more of something like that. Jed, I can start with you about that. Like, how do you see the evolution since you've gotten into the space? The Bitcoin infrastructure, the ecosystem, and what do you think we need to do to make the next 9 years even more productive?
Yeah, that's a good question, because when building our ETF, we started searching for companies that are listed and that we can invest in. And there's not a lot of them. So the whole universe that covers all companies actively or or that have some business in blockchain or crypto or any like these type of technologies, if you take them all, there are only like 100 companies from tens of thousands out there. So, so what I believe is that the adoption will come when there will be more and more companies that are building on Bitcoin. Just the Lightning Network is an amazing technology that have recently been developed in a user-friendly manner. So you have a lot of wallets that users can use them efficiently. I used to orange pill my audience by sending them the Bitcoin Standard book or Bitcoin Money, A Tale of Bitville when they're lazy to read the whole Bitcoin Standard. But now I just send them sats through the Lightning, and it's so efficient and so fast and so cost effective that that it is a much quicker way to get adoption. So we need more of this. We need more of user-friendly interactions and more companies basically that are investing in the space and are building on the space and are raising money in the space to build the next generations. And when talking about shitcoins, I mean, today you have the famous trials of Sam Bankman-Fried, and I see him as like, apart from the case and everything around it, but all these crypto whiz kids have been slowing down a lot the focus and the attention on Bitcoin and started like side movements and side projects and new stuff, which makes it a kind of a gambling casino, the whole crypto space during his era, rather than a technologically focused space. So, so I would say this bear market, and I've seen it with the .com bust, bull and doom bubble bust, basically, that happened the same. So you had a lot of extravagant business plans and ideas, but then the Amazon, Google, Facebook, etc., that were building the right technologies and the right products emerged big winners, and they were from an equity investors perspective. If you look at the past 20 years, the tech company have been like a huge growth driver of the economy, and in my opinion, the companies that will build on Bitcoin will be the drivers of the next 20 years growth.
Thank you for that, 100%. I think you know, you mentioned Lightning, and like I'm very, you know, I love Lightning because it sort of broke the model of having to try and scale on the base layer by making blocks bigger. Like big blocks are never the way. It was never the solution. But I think it's still, you know, I think there's still, if I had to say one thing that I would like to see change in the next 9 years, is the user friendliness is not good enough. I have to be frank. I mean, I use Lightning. I moved between wallets. I made some Lightning payments, and now I want to pay for something on the base layer. So just to withdraw my Lightning to the base layer was a complicated mess and I don't even think I managed to do that. So like there are some UX kinks that have to be ironed out in Lightning as well.
I've got a question, Dave. Since you've been in Bitcoin, well, not as long as some who started maybe 2014 or 15, but you started early enough. what did you think of Bitcoin when it came out? And you know, were you excited about it? I mean, I've got quite an interesting story myself, but I'd love to hear yours. And then, yeah, same as Chia, Alon, Jad, love to hear from you guys. Like, what did you think about Bitcoin when it came out? You know, was everyone buying it? You're like, what is this? You know, or did you sort of have quite an understanding before? Because yeah, my story is quite interesting. But Dave, I'd love to hear yours before we obviously go back to the use cases of Bitcoin. And I've got another question there as well.
100%. I think, it's a great question, and I think a lot of people are drawn in by the price, unless you got in very, very early for, researcher reasons. But you come for the price and you stay for the revolution. Like, if I saw Bitcoin, I saw the price was jumping, my brother was getting involved. Like, I faded it a couple times before. Unfortunately, I didn't pay too much attention. But FOMO got me, at the beginning. And the difference with me is that I took time to learn what was up. And then that's why I could kind of hold through that 2018 bear, and not only hold, but carry on, DTFD and carrying on building in the space. And that's because I really took time to understand Bitcoin and essentially what Bitcoin set out to achieve, what it's all about, what we're here to do, which is to create a censorship-resistant global money, what I call the international waters of finance, which is essentially everyone can come and trade on Bitcoin. You have it's going to hold its value. It's scarce. We're going to get into some mining questions later, but I think taking the time out to really understand Bitcoin, it's really important wherever you are in the journey. And a lot of people will get in through side, back doors like NFTs and whatever. And the NFTs, or they'll go to ICOs, or they'll get burnt. As how many people have probably faded Gen Wealth because they were too heavily allocated to shitcoins, and they just got burnt. So, take the time out, understand Bitcoin. And I think Bitcoin is the best, I'll just end with that, the best intellectual discipline to try and understand, because, I just finished writing my book called Satoshi's Testament, a guided journey through the Bitcoin white paper. So I kind of went through the white paper and gave it some explanation, and I had to learn for that. I had to, look up Ralph Merkel's papers about where he develops the famous Merkle tree, and how it's all like the digital timestamp literature, academic literature, just vast, and it's just built on, and it's very, very new. The whole concept of the Merkle tree is known, it's like I would say about 50 years old. So it's like all these, these concepts were not around for, much of history, and Satoshi came and mixed that all together, whether it's David Chow, Hashcash, or Bitgold, or all those different, proof of work hashing, and we'll get to that now. I think it was devised as an email spam filter, and Satoshi brought that all together. So take the time to get into the mind of Satoshi, see what he wanted from us, and I think Satoshi wanted us to have a little fun. I don't think he wanted us to be hard in the wool maxis, just looking at our hard wallets the whole day. I think he wanted us to have a little fun and experiment with altcoins, NFTs, and whatever, but all within measures. Don't lose sight, you know what I'm saying?
I'm going to tell you a really interesting story. You're not going to believe this. I've got a friend of mine, and I think this goes all the way back to like 2009 or 2010 when things started to happen. And a mate of mine was in partnership with a mate of his. This is in Cape Town, South Africa, and there's an email chain or thread going around, and all you had to do was just forward an email to your contacts, and you got free Bitcoin. And a friend of mine gets this email, reads it through a few times, and messages back his partner. This, it looks pretty interesting. It's I don't really know much about it, but send it through to the following people. And he forgot about it, and a few months went by, and then obviously it started increasing in value, and it did nothing for a few years. And it's always got sort of that story. I mean, you could go back and say, I could have gotten free Bitcoin just from sending it an email to a contact, which is crazy. I mean, I only sort of got into Bitcoin quite a few years later, I think when the price was between sort of $900 and just over $1,000, and bought a bit myself, and I had my own business at the time, and it was just too volatile for my liking, and I sold it all. But I'll tell you this, as soon as it went up to $5,000, $10,000, I actually was in awe, couldn't believe it. When it got to $20,000, I cursed everyone that owned it, but it was after that when I really started taking the time to understand it. And I mean, we've all got our stories, how we got in, but we all have some regrets, and yes, obviously I wish I would have held what I got initially, but yeah, those are the stories, eh?
People tend to look at these stories and say, if I wish I bought it back then, or there's a lot of anecdotes going on in the whole crypto sphere in general. But what people don't realize is that today Bitcoin at 28,000 is the same as receiving it for free 10 years ago. So the story hasn't changed, and the adoption is still very, very low compared to its full potential. And our kids will ask us, why didn't you buy more?
Sure.
And we'll answer them that we were busy discussing it on a LinkedIn podcast.
So I've got a question for anyone here, and because Bitcoin ordinals is something that sort of came about after NFTs on Ethereum and Solana sort of were doing their rounds, and for I think about 6 to 9 months, everything was ordinals. And for those that don't know, the Bitcoin ordinals is a protocol that allows individuals, satoshis or sats, to be assigned a unique identifying transaction, and yeah, you can basically build with that, and you have an image, and that's Bitcoin ordinals, and it's almost like an NFT on Bitcoin. So a question for all of you is, will Bitcoin land up being a store of value, something that you buy like gold, or do you see it sort of being where we're actually going to transact with it, or are we going to store art like via Bitcoin ordinals? Is there a future here for ordinals, or do you think it was just a fad that came and passed? Because I know there's a lot of well-renowned people in the space in Web3 that are building on ordinals, and I'd love to hear from the panel your thoughts.
Yeah, I'd love to jump in.
Yeah,
I'd love to jump in. So, there's this concept in Bitcoin where, because it's the most decentralized system in the world, when there's a need for decentralization, it'll be built on Bitcoin. So if there is a marketplace need for decentralized JPEGs, and the actual purpose of them is to have them decentralized, as decentralized as you possibly can, to have them outside the control of any central party or small group of insiders, then it will be built on Bitcoin. And I think we saw that with ordinals. You can obviously mint an NFT on any chain that you want, but it became very, very clear that if NFTs were going to be a technology that people want to use to assign kind of like a digital signature that can't be changed and can't be replicated, then it will be built on Bitcoin. So I think it almost solidified the fact that in the end everything will be built on Bitcoin. And I think what's happening right now, and I'm kind of pro the experimentation of what's happening in crypto with DeFi and NFTs. Obviously, I wouldn't put one penny in any of those things, but in general, I'm okay with the experimentation that's happening, because once it's similar with the Lightning Network, that is something that is advancing Bitcoin. So this second layer that's transacting at multiple times faster than probably actually any other L1 chain that's supposedly trying to do higher throughput in transactions. It's happening on Bitcoin, and Bitcoin is being more adopted. It just the purpose of it is, do you need something decentralized? And if you do, then Bitcoin's for that. If you don't need something decentralized and you want to experiment and create these casinos and that kind of stuff, then obviously the experimentation and the crypto wild west is there for you.
Yeah, I think what
go ahead.
I just wanted to say that I think I think that the main use case of Bitcoin as Alon said was the decentralization. I mean, Michael Saylor was talking about inscribing important documents like the Declaration of Independence or a constitution if Israel ever decides to write one on the Bitcoin blockchain. So I think there's potential for that. But again, if you want to do the shitcoin stuff, there's probably better chains options out there. I think, yeah, Jad back in the house.
Yeah, sorry, I was saying on the ordinals, when they first came out on the Bitcoin network, there was a lot of divisions within the Bitcoin community about it. I mean, there's Bitcoin, the currency, and Bitcoin, the network. And because Bitcoin, the network, is so stable, it makes it much more comfortable to build on it rather than on any other chain, because we have seen a lot of chains collapsing, and there's very few chains that are able where we are able to forecast the resistance. There's also another side of things about NFTs being a casino type of investment, and it's true that there has been a lot of excess in the NFT space, where most of the money that went there were not about the art or the technology or all the use cases the NFT were built for or were at least designed for. So it makes amazing headlines today for mainstream media to say that it's just a fad and it's gonna go away. But if you look at it from an art collector's perspective, and I can see that some of our listeners are in the art space, that at the end you can say the same thing, or you can say that all the art is nonsense and why people buy art. So for me, this bear market will also bring true talent and true value in the NFT space, and if an artist today wants to launch a collection, he has so many chains, but at the same time, if he wants to be sure that in 10 years his collection will still be operational, functional, definitely Bitcoin is going to be there in 10 years. I don't know any other technology that I'm confident to bet that in 10 years it will still be there, because as soon as you move away from the Bitcoin network and you start improving the block size or improving the technology or building other stuff in the blockchain, then somebody else comes in and it makes another improvement, and on, and it's an ongoing evolution that it's hard to forecast when and where a leader will come up. Ethereum can be one, but if you look at the transaction cost on Ethereum, that is supposed to be much more friendly, and the move from proof of work to proof of stake was supposed to make a big difference, but at the end it's not there yet. And then we saw Arbitrum coming up out of the blue and beating all the other chains. We saw Solana promising the world and then failing. And so so as an artist today who wants to build on a collection on any chain, the only one that he can be almost sure or the most confident that it will remain there in the next 10 years is the Bitcoin network. Yeah. So orders is definitely something.
And you made a really, really good point that if in 10 years' time NFTs or art in the sort of digital space, in the crypto space is still around, that it probably will be on Bitcoin. And that is why ordinals actually would was so successful, why they were so hyped up, is because as soon as people started creating ordinals and inscribing, the lower numbers were the ones that were the most rare. I'm not sure of how many inscriptions. I think there's been about 36 million inscriptions at the moment. I stand to be corrected. But if, for example, you were able to buy some art from a well-known collection, sort of under 100,000 the number of inscriptions, or under 20,000 inscriptions, then you could hold that as potentially something that could be rare in years to come. Just as an example, CryptoPunks on the Ethereum network, why that is so rare, because it's one of the first collections. So ordinals are almost seen as one of the first fungible collections, and the lower the inscription, the more rare. And that is why also companies like MetaGood, who have on-chain Monkey, were able to inscribe their whole 10,000 collection on Ethereum, and why they've now spent, check this out, they've spent $1 million to now transfer their collection from Ethereum to Bitcoin, because they understand what's actually going to be around in 5 or 10 years' time. And once things are more decentralized, as Alon said, then yes, Bitcoin will be the place for that. So it's actually quite interesting to follow and see where it all goes from here.
Yeah, I got a little bit to add on. I think Bitcoin for me is more like the place to store the value and transfer the value. And for ordinal, I don't see it's the real solutions to tackle any real problems. To be honest, I think it's just think about real world. We got the currency to pay to store, even though those currency are not a good asset. But this is how currency work in real world. And think of those NFT, or you just say any additional applications. It's just a different, for example, Ethereum, Arbitrum, or whatever it is. It's more like association, right? Like art association. If you're interested in art, you got art associations. What you might care more in your art association is about your credits. Credits, just like Ethereum, something like that, a different shitcoin other than Bitcoin. But when there's an artist, when you want to transfer, make some transaction on those artists, you use the USD in the real world, for example. But in the Web3, you use the Bitcoin. So I think at this moment in time, these are more like two separated systems. So for Bitcoin, it's more like the value and the transfer system. And if you want to talk about applications, maybe you can move on another chains with higher TPS with more, less gas fee. So yeah, that's what I'm thinking about ordinal.
Yeah, for sure. I think ordinals can definitely get the crowd going. NFTs in the Bitcoin community can trigger quite strong emotions, and we're getting towards the end of our show, and I want to kind of take we always start looking back and looking forward. And looking forward in Bitcoin, we have May 2024 halving. Stay tuned for the halving party in Tel Aviv. I don't know, I need to make something. We need to put something together. We gotta celebrate it, because the amount of supply being mined every 10 minutes is dropping by half. So I want you guys to kind of give me your feelings towards the halvings. What are you excited for? We'll start with you, Joe, because you're a miner, industrial scale one, and you've been through many halvings. How do you see the demand and supply dynamics in and around the halving?
Yeah, I think think of the rule of demand and supply. If the supply is going down and there are more increasing application scenarios on the demand side, let's say different Web2 institutions or different governments in the emerging countries, they are adopting Bitcoins, so demand goes up and supply is going down. So based on the rule of supply and demand, the fundamental value of Bitcoin should go up. So I think everyone is pretty prospective about a Bitcoin, no matter it's the Bitcoin holders or Bitcoin miners. As a Bitcoin miner, I would like to share one index is that the total hash rate within the Bitcoin network grew almost 60% from the beginning of this year to now. 60% growth on the hash power. So that means that even though the mining difficulty is going up, and even there is a having effect, like in the next year, the Bitcoin miner is still prospective on these things. It should be the existing Bitcoin miners adding more hash power to their mining farm, or there are more newcomers jumping in this Bitcoin mining industry. I think from the miner side, people are prospective, and they are not really have the concern about the growing mining difficulty, because 2 weeks ago, Bitcoin mining equipment suppliers, the Bitman, just announced their latest mining series S21. So given that there's a more efficient miners, and there are more players in this industry, the whole Bitcoin network will be more secured, and everyone is still positive about this. So overall, I think, getting brief, as a Bitcoin miner, we are all pretty excited about next halving effect, and this is because the fundamental value of Bitcoin might goes up, so that makes the price potentially have some some surprises.
That's interesting to know about the new model of miners. I mean, I wasn't around when people used to mine on their laptops, and now you need machines, energy guzzling machines. Those energy guzzling machines are going to get less reward next year, cut by half. What do you think about that? How are you preparing for the halving?
Yeah, so here's a little hot take maybe. So Bitcoin right now, just because NewHedge is a data analytics platform that kind of gives us a really good picture of what's happening in Bitcoin. The current circulating supply of Bitcoin is 19.5 million. That's 92% issuance already. So we have around less than 8% of the Bitcoin supply left to issue. So that's around 1.5 million Bitcoin left to mine. What's really interesting is that since Michael Saylor came, and that was in 2020, the amount of Bitcoin on public and private balance sheets on companies is 1.6 million. So we've already, within this 4-year cycle, we've almost had 2 halvings in one, in the sense that there's more Bitcoin being taken off exchanges and circulating supply to be left in very long duration treasuries as kind of like a hedge against inflation, or as a long-term asset to hold on the balance sheet. And I think that's as the halvings kind of go on, and there's less and less Bitcoin left to be mined, I think it becomes less of this these kind of like 4-year cyclical cycles that we see just on halving. I think what we see with people accumulating Bitcoin, and not just public and private companies on the balance sheet, but with long-term holders that are holding only 0.1 Bitcoin or 1 Bitcoin. You can see this in on-chain, that the amount of holders is just continuing to grow. So there's an active community effort that's kind of globalizing around the idea that Bitcoin is this long-term asset to hold. And I think that has now a bigger effect than these halving cycles.
100%, and it's very important also to look at it from an institutional, governmental lens as well. And maybe Jack can step in here, that Alon gave us the retail, take us to the institutional. What the halving going to do for Bitcoin awareness amongst these institutions? They typically tend to zone in and out of Bitcoin, sometimes being very, we all know the meme, Bitcoin at 60,000, everyone's lining up. Bitcoin at 28,000, no one wants to come close. So what do you think is going to happen on an institutional level as the mining gets closer? The halving,
the halving per se, I don't see it as an institutional catalyst. It's more like as a nice headline that can trigger an investor to step in, a kind of fear of missing out effect, because in the past it used to have like a much bigger effect on the supply, because the miners were mining a lot more in percentage of the total supply. So, and they were selling it to hedge their costs and pay for the electricity, etc. Today, and so each time there was a halving, the amount of Bitcoin they were selling was halving, and therefore it had a market impact. Today, the market impact of Bitcoin miners hedging their supply is much smaller compared to the overall volume traded every day. So we're a magnitude of like maybe 100 times compared to what we had in the early days of the halvings. However, from a headlines perspective and from a media coverage and from an interest, an intellectual interest from the mainstream investors to the Bitcoin space in general, it's always a good catalyst and grabs a lot of headline. I see more like the Bitcoin ETF as that is going, in my opinion, to come in the US, a much bigger catalyst, because then it would be like a perfect wrapper for institutional investors that want to get direct exposure to Bitcoin. And therefore, these are the two things. There's also, from an investor's perspective, you have to also look at what's happening in the world. So there's the Bitcoin specific news flow, so the halving, the ETFs, the adoption, the Lightning wallet, all this news flow. But you also have the other stuff that are competing with Bitcoin. And from an investor's perspective, today with bonds yielding rates between 5 to 6%, risk-free, you have a slowdown in all type of investments, whether it's in Bitcoin or in tech or in now there's a big sell-off in real estate, and a lot of industries are getting hurt because bonds are yielding so high. So what the central banks of the world do is also a positive or negative catalyst for Bitcoin. And in general, throughout the years, trying to follow and time the price movement of Bitcoin, I tried like so many ways, and so many catalysts ended up being going the opposite direction and vice versa, that I stopped doing this exercise. I just know that in 10 years it's going very high, much higher than where it is today. If it's 6 months or 3 months or 1 year, I don't know, in 10 years for sure.
Patience, we all need a bit of patience. Jad, thank you very much. Dave and I want to wrap things up. I mean, we can literally talk about this for the next 10 hours, or some of us at least can. So I want to just say thank you for everyone that came through today and took from your valuable time. I know how busy you all are. Thank you, Alon. Thank you, Joe. Thank you, Jad, for adding so many insights and for speaking with us. Dave, always a pleasure, and can't believe we're already on episode 7, and we're building a really nice community here. It's so nice to talk about a subject that we're all passionate about.
Thanks.
For sure, guys. Thank you, and thank you to Jad, Alon, Joe. Thank you, guys, for joining in and sharing. This is definitely not the end of our discussion, and I think Jad ended us on the best note, take a long-term view. Shut your computer off, go touch some grass, and come back.
Patience,
Stop studying the chart. 10 years time, Bitcoin will be there, and it's going to be fire. So thank you guys for joining us. We'll see you next week on the
Next week.
show.
Cheers, everyone. Have a good one.
Right.